Hello, and welcome to another update video about gold. So from a shorter time frame point of view, we will take a look at the Elliott wave patterns here in this video. We'll discuss the relevant levels for this week, support, resistance, wave patterns. People are asking themselves, what's driving these prices? That's crazy. We're in all-time high territory. Is it retail? Is it institutions? Well, from an Elliott wave point of view, the reason is quite simple. We are simply in a still evolving pattern that represents certain market sentiment, in this case bullish sentiment, in this move to the upside, which just isn't finished yet, because we are still looking for higher prices within this still unfolding third wave, as discussed before. There's no change, and however, the reasons behind it, I always argue we can't fully understand them. It's a complex web of interactions of different concepts, market sentiment. It all comes down to market sentiment. Essentially, this is what's driving prices directly, because people who are feeling, or institutions who feel compelled to buy, it all comes down to fear and greed. These are the two basic emotions in financial markets. Now, there can be factors that affect this sentiment. Now, that is what I want to explore later today in a separate video, a more in-depth video, a long-term video about gold on our main channel, MCO Global. If you're not subscribed, you can do that. Feel free to do it. I'll link it in the video description. I promised a video about gold and silver. I think it will be too much for both. I think I will do a video about gold, and then later in the week, I'll make a separate video about silver, and then maybe there'll be even a third one comparing the two. Chart-wise, but if you're interested in getting some more information about the gold market, fundamentally what's going on at the moment, there's something going on. Certainly, I can tell you that there's some geopolitical reasons potentially driving here the run for gold. And it's quite explosive. So we want to talk about that. Feel free to check it out. There are already other videos here, and your support is overwhelming. I mean, we only launched this channel last week. We're already above 5,000 subscribers. So I wanted to get above 5,000 on the weekend. Well, that happened. So thank you very much for your support. But yeah, many of you might not have subscribed, but it's going to be the new main channel that brings all of the MCO communities together. So long term, I think there is obviously something underlying there. And in the short term, however, looking at the Elliott wave patterns here, it's simply filling in the bullish count. Now, I would argue that with the latest push higher, the white count is now really completely full. This is wave A, and the B wave is due, actually overdue. What we want to do in this video, just adjust the relevant levels together. I want to talk about that. But also, I believe that blue is getting more likely. Blue is getting more likely, and I think, so that we can see it better, I will change that to yellow, because it's easier to see, just better visibility. And then we will talk about the two patterns, okay? And how that all integrates into the bigger picture. I think we'll save that for the video later today. And that would just take it beyond what this video here is for. So there are two wave counts I'm essentially watching for. They are both bullish, as you know. And idea is still that we are in an overarching wave 3 here, a larger degree wave 3 here. Yeah. The problem is this would be an ABC structure. Yeah, probably a large ABC structure, of which we've already seen waves A, B, and C in a larger A wave. So this is only in the white count, only the A wave of the third wave. Next could be a B wave and then a C wave rally that might drive us way above $3,000. But due to the length of this move, due to the extension of the rally that happened from the December low, it is, in my opinion, becoming less likely that it's the white count, just due to the extensions. Yeah, if this is a C wave, which is a 5-wave move, then it is way longer than the initial A wave. And this is not so realistic. And I might very well, when I really look at the larger time frame, maybe even change that later today. But for now, there is, from a smaller time frame point of view, it's worked. Okay, so the support levels have been respected. I just want to say that this year, this A wave is very much extended. or let's say wave C of A is extended. So therefore, we already discussed in the last videos the potential for the yellow count. Well, it was blue before. And where we say that, look, at the moment, the idea is this is going to turn into a larger ABC structure. But because this is so high that we have even broken above, and that is what we needed to do, that we have broken above the previous high that formed in October at around 2,800, it's possible it's wrapping up the third wave directly. And that this here represents all of the A, B, C pattern. That this is not ABC in A, but it's ABC in the larger third wave. Yeah, and then in this case, we're just working on wave C directly, wave 1, 2, third wave, wave 4, 5. So we get just one more high more directly, and that's it. Just because if this happens, the third wave, the larger third wave, is healthy. The larger fifth wave is long enough to be high enough above circle wave 3 to make it a healthy wave 5 in a larger third wave. Okay, and the higher it goes more directly, I think the higher the likelihood that internally this here is yellow wave 3. And we have already defined in recent updates the next upside targets. Those were 2,908, to which the price reacted on the 5th of February and the 7th. And then when the price reached that target, I said, okay, that was the last update. This initial move up, so from the swing low in February, here at 3rd Feb, this here might have been three wave move up, fourth wave, ideally that low holds. And we're now moving up in wave 5, which would be an ABC structure. Whether that's happening within this third wave or within this fifth wave, in the white count isn't so important. The microstructure is shared between them. And my latest view was that we could get one more high to 2,934. Now that happened. So what now? Well, I can only say the wave count is now full. We can still focus on higher, but the risk is naturally now very high. And I would argue a pullback is due. And I will watch, first of all, the upper support area, which would be for this internal fourth wave. I'm slightly leaning towards that scenario due to the very direct fashion this move up extended in. And support would be between 2,830 and 2,770. So as long as we're holding above 2,770, the yellow scenario is a relevant scenario. And it takes a break below the low of last week when the price turned around here in this support zone on Friday at 2,875. It takes a break below that level to indicate that this larger wave 4 is actually unfolding. Until then, more direct upside is possible, and any break above the intraday high should send it to 2,967 next. So still bullish with the potential of a pullback. Risk is getting high now. I would first watch for the wave 4 to see if it holds support. Then we can explore the larger B wave. So that's the update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thank you very much. Bye-bye.